This week, how retirees can prepare for war, increasing inflation, and stock market losses. Welcome back to the Industry Leader Update. Inflation is here and it's likely to worsen before it improves. A hot war is escalating as Russia's invasion of Ukraine increases the likelihood that NATO troops will be engaging with Russians. European markets are on edge, and last week the U.S. Dow Jones Industrial Average and also the S&P 500 indices fell. Now they're verging on the edge of being in correction territory, each 10% down from their recent highs. War brings a host of challenges, especially for those that are nearing retirement or are living on a fixed income during their non-working years. The world can be a frightening place for both savers and non-savers alike. Those who have been setting aside money and saving diligently for retirement are typically invested in equity stocks or mutual funds. Now, each of those brings an average return that outperforms safer investments, but each brings a risk of a loss of principal should the markets turn south due to world events before or during retirement. Now, most investors say they plan to reduce their risk exposure with allocation changes before they get to retirement, but in reality, many actually get hammered by the market because they've been chasing higher returns. And it's going to be a bumpy ride. Heightened volatility on the escalation of the conflict shows the markets have not yet fully priced in the likelihood of a deeper conflict, said Mark Haefele, the Chief Investment Officer at UBS Global Wealth Management. And he added, "We expect continued volatility in the near term as leaders calibrate and announce their response to this escalation." In a March 2003 working paper, the National Bureau of Economic Research noted the following on war and its impacts on the equities market. "We find large effects in the equities market, and the war lowers the value of the U.S. equities by around 15%. This effect is concentrated in the consumer discretionary sectors, airlines, and IT. The prospects of war do bolster gold and energy sectors. Should such a scenario play out, Americans could be looking at another period of stagflation, similar to that we experienced in the 1970s. As a refresher, stagflation occurs when consumer prices rise while the economy contracts. Another factor that is roiling the equities market is the Federal Reserve's planned series of interest rate hikes, all in the effort to rein in inflation. So, everything considered, inflation, war, and a fragile stock market each stand to disproportionately impact the older American. And some are going to have to make some very difficult choices: return to work, sell their home, reduce spending, or tap into available assets. And those in the market are faced with selling investments at a loss, and they can also continue fixed withdrawals from their market accounts while the underlying returns fall or go negative. And there's also one solution that's hiding in plain sight: their home. Wars and global financial markets are going to touch each and every one of us, retired or not. First, with more dollars required to fill your tank or grocery cart. Next, with lower returns or losses in your investments and savings. And in times such as this, prudence and preparation are worth their weight in gold. Your mission, should you choose to accept it, is to help the older homeowners in your area understand their options and how they may be able to implement them. Where do you see inflation and our economy heading as a result of the war in Ukraine? Leave your comments below, and if I can ask you a favor, please spread the word about this show and this episode by sharing it on your LinkedIn, Facebook, and Twitter accounts. You can view dozens of our previous episodes and also our latest each and every week on our YouTube channel, Heightened World. Just be sure to smash that subscribe button. That way you never miss a show. And every Friday, listen to the latest reverse mortgage news on the go, whether you're driving to work or at the gym. Heightened World Weekly. Thank you for joining us, and have a great week.